Let's welcome in and get a perspective on telecom. Nitin Soni is now joining us on the phone line. He is, of course, at Fitch Ratings and tracks telecom. Nitin, thanks so much for taking out time for us. Can you just start by the Vodafone rights issue, the sort of response it has gone? Do you think it was essential for them to raise these funds for their rating?
Yeah, thanks for having me on the show. So we don't have a rating on the Vodafone Idea entity, but we do rate Vodafone PLC. I think, given the fact that there has been so much of competition in the industry, Voda Idea merged together, and they still have a massive debt on their balance sheet, while EBITDA has declined significantly to about 600 million or so US dollars. So their debt to EBITDA is quite high. So yes, that was a necessity to bring in some equity into the business to provide some relief to the balance sheet. But what we believe is that this may not be the last time when they are injecting equity into the business. And, this business will have to do a lot of capex for $3 to $4 billion a year, at least in the next 12 to 18 months. And they might require more equity injections, in the future.
Nitin, we did speak to Kotak Bank as well, who were, heading this transaction, heading this whole thing. And they said that investor sentiment is clearly changing in a big way when it comes to the telecom space. And investors are now betting when it comes to the turnaround of this company. How are you sensing this? How are you reading into the possible turnaround? How soon can we expect? And what is it that the company at this point of time needs to do in order to sort of, make up or show some kind of an improvement when it comes to the kind of trust that investors have put in the company?
So that's a good question. And, we have been saying that this is a market where the average revenue per user have limited downside risk now. Going forward, we believe that the ARPUs can grow from here on, because right now at the current tariff level, all the big three telecom companies are not making sufficient return on investment. So, and we have looked at Jio's latest tariff has fallen in the last quarter, which is primarily due to the addition of the low ARPU subscriber in the rural areas. But having said that, I think the situation has dramatically changed in the last 2 years. Now you have a situation where three large telcos have emerged with a similar revenue market share. And we believe that Jio has a revenue market share which is very close to Voda Idea and Bharti of about 32-33%. And Voda Idea is in fact losing a bit of a revenue market share. And I think to answer your question on what they need to do is that they need to decongest their network for Vodafone Idea. Their network experience right now may not be at par with Jio and Bharti, so they have to invest more on their network so that they remain competitive with Jio and Bharti. So I think, as I said, they would probably need a large capex investment in the next 12 to 18 to 24 months to make their network robust, and also to prevent any churn from any additional churn from their network to other companies. And I think sooner or later we should, look at the situation where Jio is kind of satisfied with their revenue market share, and they will stop discounting in the market, and that will be the right time when the tariff will start to grow from there on.
Right. Nathan, can you just talk about Jio as well, the sort of market share that they have gained, the sort of landscape that they have? Even they are looking for fundraising, so entire telecom space, including Jio, is looking for some funding.
Yeah. So, Jio has, definitely taken the market with a surprise. They have gained a large subscriber base now, 300 million plus, and the revenue market share is also clearly growing. And their network is now congesting. It's no longer, they no longer can have a sigh of relief, because they also now have to continuously invest on their networks to provide 10 plus GB data to their subscribers. And in the next 1 or 2 years, you will have the 5G auctions. So even Jio, which, on the leverage basis, they are okay, and we rate them at a BBB minus with a stable outlook, Reliance Industries. But having said that, they also need to raise money because they know that in future they have to do more capex and they have to spend money on 5G auctions. So yes, I think Jio, as I think they have announced that they want to monetize their fiber assets and raise money there to, have a war chest for the next 2 years to bid for the spectrum and to continuously do capex.
Okay, Nitin, thank you so much for coming on board and sharing